Now, there's a lot to cover today. So what I would want you all to just stay with me in terms of letting me know that, okay, you're all good. There's confusion, so I can say stop, talk about it again, and then come back. There's lots to cover, so I'm going to go deep into what needs to be spoken about today. So tomorrow, on Monday, we begin to spend a lot more time on the charts and applying information on the charts. Today should be the end of majority of the educational stuff. However, there's a few things here and there that I will pull you back and say, okay, you've got this piece to keep in mind, that piece to keep in mind, but I'll talk about it next week. Okay, so that being said, let's begin. Okay, so far, what you've learned is that you need a move down. When that move down is overextended, you have a trap. That trap slows or stops that move from coming down. Now let's talk about what these moves are. And let's talk about the context, slightly open up the bigger story so we understand, why are we even looking to stop this move down? What is this move down? Yeah. Okay. So what I'm going to focus today on is a scenario, which is you've got a move coming down, which is a downtrend. Now we're naming this move as a downtrend, right? So your main focus or your main bias is to sell this. That's your main game plan, yeah? To sell this. Why? Because we always sell with the flow, with the trend. Now, if you see what you see, and these are all last sellers, right? Now, before we start, do you all know what these pieces are that's going up and then crashing down? Do you know what they're called?
Pullbacks?
Not so much pullback. We'll talk about what a pullback is. Any other names comes to your mind?
Legs?
Legs, excellent. Legs or even continuations. Okay, I'll talk about why we call them legs or continuations now. So you have a downtrend, and you as a trader, or us as traders, we say, very good, downtrend, looks healthy, but I don't want to get involved that low. I want to get, it's overextended. I want to get a decent price before I get in. That's our game plan. As a big seller or the big boy selling this and moving this market, let's say they have additional positions to fill. Let's say they have 100 billion positions still to fill. Do you think they would be interested to fill those positions that low as a big boy?
No.
No. So even for the big boy, they say it's too overextended. I sold my positions from high up there. I have more positions to fill. I'm not going to sell it that low. I want a good price or better price. Yeah. So all that you can understand or follow through. For the big boy, it needs a better price or a good discount. What else do you think they need to fill in those positions?
Buyers.
Excellent. Excellent. So for them to fill in such big positions in a downtrend, they need buyers. So they need to invite the buyers, entice the buyers to come in so they can fill in those 100 billion positions, right? So that's the next piece that we have to keep in mind. Now, if you have a downtrend coming in, and this is where the price is right now, how would the buyers get interested to buy if the prices are coming down hard and sharp and it's a trending market? They would be stepping aside. They say every time prices go up, it just crashes down, crashes down, crashes down. I don't want to buy this, right? So then what do we say? We say that even for that downtrend, as a story, that downtrend, for the buyers to come in or for a better price to come in, for the big boy to resell, this move down needs to stop. You know, the stuff that I've been telling you from day one, that you have a move down, it needs to stop. Even in a downtrend, this move down needs to stop. Now, you all know, how does a move stop?
A level.
A level.
Take the seller out in this case.
Oh yeah, right.
Very good, very good. So you need that last seller to get taken out for this move down to stop. So you say, okay, you have your pullback coming in for the last seller. Oh, look, this time it's taken out the last seller, which means the buyers are here. This will entice even more buyers. Right? So this trap, what it's done is it stopped this move from going lower. So you have a bottom. It's invited more buyers now. So the buyers are interested, right? And it's ticking majority of the boxes that the big seller wants to happen. And of course, a better price is coming in for the big seller to begin to sell again from. Okay, so now what this means is that all these tiny move up, the continuations, they're simply sellers cashing out. Seller is coming down, it cashes out as a tiny bit of reaction and then continues lower. Tiny bit of reaction, continues lower, and so on. At no point do you see a buyer begins to come in like it does over here. Yeah?
Yes.
There's no buyer that comes in like it does over here. So all these are legs or continuations. A pullback is only coming in now when the buyer comes in. Yeah? That's one thing. The other thing is that as a downtrend, when it goes low, low, low for a while, it's overextended. Even that downtrend needs a breather, needs a refresh. Let's say, for example, you want to re-enter. You can only re-enter when the breather comes in, or we call it when the refresh comes in of that downtrend. Okay, let's talk about this. So when the trap comes in, or let's call it from now on, a refresh comes in, right? What has happened is that strong move up, taking out that last seller, brings in the buyers. It entices the buyers to say, okay, now begin to put all your big positions. Yeah. Now, do you think the buyers will buy that high?
No.
No, right? They want price to come back to a decent level or a decent SNR or a decent trap before they begin to buy. Okay, so prices need to, for the buyers, it needs to give them a decent level or area for them to buy. Now, the big seller, the big boy who controls this move down, has got two positions. Position number one, which we call a primary position. Position number two, we call a secondary position. Yeah. So the primary position of the seller is a small position it puts in the market from this area to help the price go back to that trap area to allow the buyers to begin to buy. So it doesn't put all its position, it puts tiny bit, so it doesn't crash down. It just goes tiny bit to the level itself or the trap itself. Okay, so we call this move down a primary sell. A primary sell by that big seller. Okay, now what happens over here is that buyers begin to buy big positions at this trap, which you all know it's a release area as well, correct?
Yes.
Okay, so this is where the buyers begin to buy, put in all their positions, and prices begin to go up because of that buyer. And this is where the seller says, excellent. These are the positions I needed to put the remaining of my 100 billion to crash down. That's their secondary sell that they do to crash down. Yeah. What this really is, it's simply a trend down that gets overextended, right? Stops because of the trap that comes in, or a refresh, now we call it, right? And the refresh allows for the buyers to come in so the seller can continue that trend down again. Okay, so when the trend begins to continue down again, then what you will see is you will see those leg number one, leg number two, leg number three, like you had over here. So it becomes the trend is born again, and that's why these legs become fresh and new. Yeah. In other words, if these are legs, let's say leg number one, leg number two, leg number 3, 4, 5, and so on, then there's got to be some sort of a refresh that's happened at the top that started those legs. Does that make sense?
Yes.
Yeah. Okay. Okay. So let me just remove all this. And let's talk about it a bit more. So this is that area when the primary brings the price back to the trap area. We have multiple scenarios depending on how desperate the big seller is. So what happens is that when buyers begin to buy from this zone, from this trap area, prices could go that deep and the seller says, okay, that's all I wanted, I'll take it lower. Prices could come in, let's say midway, and then crash. That's where the sellers want it, and they take it from that area. Or prices could be, the sellers may be very desperate, where just builds orders over here and then crashes. That's how desperate the seller is to take it lower. And I'll talk about this a bit more. Okay, now what happens is, because you're in that downtrend and the big seller is in control, this is how we look at this. You have your trap or refresh coming in. You need the price to come back to the trap area for the release to happen from here. That release is, in this case, the buyers buying, right? The buyers buying. The buyers have the opportunity to literally launch from this area if they're very strong. Yeah, that's what the buyers would need to do if they're very strong. Now, that's what may also happen if the story is not a downtrend. Yeah, but because the story is a downtrend, they're allowing the buyers to buy from here and prices begin to go. At any point, if this move up begins to stop and not keep on going, we say this is a sign for us that the big boy seller is putting in its secondary trade or secondary position to restart that trend to go lower. Yeah? Everyone follow through so far?
Yes.
Okay. Okay. So very quickly, if this is your 60 minutes, this whole thing, 60 minutes, and you have this move going up, 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 if you were to stop this move going up, how would you see it stopping or not?
For the 5-minute time frame.
Go down one time frame.
Go down 2 time frames on the 5 minutes. Yeah, spot on. Go down 2 time frames on the 5 minutes to see prices going up, 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 up. As soon as you have a takeout of the last buyer, you say that takeout of the last buyer is a stop of this move going up, and it's only being done because that big seller is coming back in. Okay. And I'll talk more about this a lot more in the coming days. The whole entry and the stop, we'll talk about this a lot more later on. Okay, but that's the piece. Now, because we are in a downtrend and we like to be with the big boy, we are not going to buy from this area. This is a counter trend for us. We are going to sell our secondary to go with the big boy. Yeah? Make sense
Yep.
so far? Yeah.
Yes.
Yes.
So downtrend, refresh comes in, let the primary come back to the trap area. So the release happens, a release that allows the buyers to try for the very last time. And if the buyers struggle to launch, that means the secondary seller is now taking over. Okay, so just to add one more piece. Which is any activity happens from this area all the way to before that trap is taken out. All that activity before the trap is taken out, we call it an anticipation activity or an anticipation trade for us. Yeah, because we not everyone sees it as a sell. Only the professionals will see it as a sell. However, once the price begins to break through that trap area and gives you an underside, then the whole world will see it as a sell. And then it becomes an on market. That's an anticipation. From here, it's an on market. Yeah, and on market, you'll see prices, people will just jump in and then it would move fast as well. Okay, now, one thing to keep in mind is in a downtrend, when you are in a downtrend and high volume begins to come in at the bottom in a downtrend, then always assume seems like some sort of a refresh may be coming in. Why? Because that refresh is only created when a buyer comes in. So you will have high volumes when the buyers come in. But it's just a temporary buyers to resolve back down. So once it resolves back down, all those volumes would be part of the seller. Yeah, but the volume would come in. It's very normal for the volume to come in because the buyers need to come in for that refresh. Okay. Any questions before we go to the charts? Have a quick look at some examples. So what we've done so far is we've said, you know what a trap is, but now we're saying use that trap in the right scenario. So scenario number one for us is it's a downtrend. We have a downtrend, and all we do in a downtrend is we sell. And we're looking to sell that secondary to take it lower. So you see, the stuff that you've learned so far, which is how do you stop a move from going up or down, that's coming handy. Why? Because you want to stop this move down, this downtrend, to get your buyers, to get a refresh. You know how it stops. You have to get a trap below. You want to stop this move up from going higher so you can get your secondary sells coming in. You know how to stop it because you know you need a trap to stop this move up on 2 time frames down. So whatever you've learned so far, which is stopping a move from going up or down, we're going to now use it in the right context. Yeah. If
One
you all are
question.
good, yeah.
Yeah. So just with the volume then, so since the big boy is reloading, are we expecting this volume to be higher than whatever stopped it?
This is something I'll talk about next week.
Okay. Thanks.
No worries.
I have one question, Ali.
Yeah.
Regarding this. Yesterday, I tried to do trade the same strategy.
Yeah.
But it was the same. It was, I think, Euro, New Zealand too.
Okay. Okay.
Anyway, yeah, when it's back to the trap area.
Yeah.
Before is that in the lower time frame, it makes it seems that it makes new trap area. Which one is considered in this way? This one or this one. It makes like trap area again like this.
Which is your other one?
This one.
Oh, okay. So in this case, this is your last seller, goes down and then breaks up. This is where it breaks up.
Yeah.
So everything below is a trap, and
Mhm.
from that everything, only this piece you're more focused on. Yeah.
Yes.
So yeah. So when prices come back down, the buyers will buy from here to launch.
Mm.
In this case, we're expecting it to fail because it's a downtrend and not keep on going. If it keeps on going, there's another reason for it. We'll talk about it next week. But we're expecting it not to keep on going, right? And then stop. So it begins to come down. So whatever the case is, this remains as your trap. It doesn't change.
Okay. The higher time frames remains the trap. This is my
Yeah.
focus is going to
Yeah.
be higher time frames. Not
Yeah. No.
whatever is happening here. It doesn't matter.
Yeah. This remains as your last as your last trap.
Okay. Thank you.
This primary cell and secondary cell, are they in the same level or?
Yeah. I'll talk about this properly next week.
Oh. Okay.
Okay, let's have a quick look at the chart. So what do we have here? Let's read this properly. So you've got a move coming down. That move begins to break some sort of a last low, right? So we say, okay, we have our seller coming down to that point. Does some sort of a leg up, comes down. I think it closes below. If I remove those drawing, it begins to close below. So we say, okay, we have a new seller here now. Begins to hold, drops down. We say we have a new seller now. Hold, goes up. Hold, goes up. Hold. What do we have here?
Refresh.
We have a refresh. Yeah, we have a refresh because that last seller is taken out. All those are continuations. This is the first buyer coming in. Okay, the big seller says, okay, I will help by putting my primary trade to take price back to. Let's draw a trap first. What sort of a trap is this to start with?
Looks like type 3.
Yeah, type 3, that's our trap. Yeah, so we say the primary seller, the primary sell takes the price down to the trap area over here. Buyers say, very good, because of the trap or refresh, buyers say we're going to build orders to buy and take it higher. That's the buyer's game plan. However, buyers build orders. The big seller says, I'm very desperate. I want to take all that and go. And it does go away. That's your secondary trade that's already coming. Yeah? Okay. Don't worry about the entry on this one. I'll talk about it. Okay? So when it goes down, there's some sort of a leg, crashes down. I think it closes down here as well. So you have your last seller over here. Does so some sort of a leg, crashes down. You have your last seller, a new last seller over here. Yeah? Now, last seller, prices come back up and they keep on going higher. What has happened just now?
Refresh.
Refresh. Okay, What sort of a trap is this?
Looks like type 1. I don't see a stop.
Very good, very good. Type 1. So I'm going to draw my trap from that SNR all the way down. Yeah. Now, what happens is the seller says, okay, very good. I have more positions to fill. Price is here right now. It puts in its primary position of primary trade, takes the price back to that trap area, allows the buyers to buy, and they begin to buy. It begins to struggle to go higher. Secondary, sell for the big boy, comes in and slams down. Yeah. So that's how things work. Now, is everything good so far? I think, Nicholas, you have a question?
Yeah, I can hold off if you want. If you want to keep going.
Yeah, no, go ahead. Go ahead.
Okay, sure. Yeah, just in regards to the first one, we just put the annotation up. This one
Yeah.
over here, right? So like, I'm fine in the context of a downtrend, right? Like, I'm sure you're going to explain it at some point to us, but I just want to know, like, I know you talked heavily about, you know, that these traps are confirmed and prices can come right back down, right? So like this seems like a spot where price goes up and then comes right back down. So like, do we want to see some sort of hold, or is this a special situation? Just want to get that clarified in terms of like the actual trap itself.
Yeah, I don't see any other annotation apart from the circle.
Oh yeah.
So I'm missing.
Sorry.
some-
So like
yeah.
you told us before, like, you know, when you see this move up, like it just breaks that guy who started it.
Yeah.
And then comes right back down.
Yeah.
Right. That we don't want to see that. We want to see, you know, price hold above. I'm assuming we want to see that in the direction of the trap that we want to trade, and we would count this as a refresh. Hopefully my question makes sense.
Yes, it does. It does.
Okay.
So this is again something I'll be talking about properly next week.
Okay, I
But-
figured I should
yeah,
have done that.
yeah. That's all right. But I think you're on the right track. You have a downtrend, right? And you still want to see some strong selling pressure, right?
Right.
So this is your last seller, begins to hold. That break up is generally okay, right? But when you want a strong buyer, you want it to keep on going, rolling over, and then coming back, right?
If we were trading that direction, that's what we want to see.
Yes.
Got it. All right.
However, in this case, when it goes up, comes down strong, and comes back to the trap area, so we say that's a good sign actually, because that shows the seller is still around.
Right. Strength in the direction that we want to go. That's
Yeah.
okay. Cool. That answers it enough for now. Thank you.
Yeah, but I'll talk more about it next week as well.
But it still counts as a refresh for us, and those are the trades.
Yes.
We're not looking to do trend continuation because we have no idea really. Our edge is really a refresh first.
Exactly.
Got it. Okay, thank you.
However, what else we can do with these refreshes, I'll cover this more towards, say, the end of next week when we've done a bit more advanced stuff. Okay, but for now, the aim is to downtrend, refresh, primary, secondary sell, downtrend, refresh, primary, secondary sell, and so on. That's the whole idea. And just to mention that for next week, I'll say it now because we've done a few examples. For next week, from Monday onwards, so Monday and every day from Monday, you all are going to pick a pair for every session we do, which is you before the session, you come and see your pairs on the chart, and you're going to look for a trend like we have over here, a trend, and you're going to look for a refresh, primary, secondary, with the aim to sell that secondary at New York. And you're going to use your demo accounts to sell these trades, all demo accounts. Yeah. Now, what will happen is that when you come to the session, I'll take all your pairs. I'll ask you, okay, Donald, which pair do you have for today? Thomas, and so on, right? And then we will look at your pair. I'll ask you to explain why you've selected this pair. What's the main reason? And then I will hear out your reasons, and then we will look at that pair and say from A to Z what needs to be done. And then that way your reasoning will get say tweaked and refined. So trade after trade, you will improve on your pair selection. Yeah, that's the whole game plan for the whole of next week. Okay, all good on that? Can we move forward?
Yes.
Yeah.
Yes.
Okay. Let's have a quick look at another example. Okay. So let's quickly cover this. Now, before we start, on this chart from left to right, what do you see? Do you see an uptrend, downtrend, or sideways movement?
Uptrend.
Uptrend. So you say very good. We have an uptrend. The big boy is the buyer. Okay, let me do this. And let's do that. Okay, now, first of all, in an uptrend, what's our game plan? In an uptrend, we want to go with that big buyer. And don't forget that big buyer has two positions to fill. Primary position, which is a temporary buy it will do, and secondary position, which is the launch. Okay, we want to be trading the launch. That's one thing to keep in mind. Second thing is that the big buyer will only buy when a seller comes in. Yeah, so that's something to keep in mind, that the big buyer wants the seller to come in first before it begins to buy. All right. So let's have a look at this uptrend. Price is going up, 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 up. That's the highest point. Highest point. This is my last buyer. Okay, last buyer. A pullback comes in for that last buyer, begins to hold, 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 hold. Crash. What do we have?
Secondary. Came in.
Trap.
At the moment, we have a trap. Yes, we have a trap. And what sort of a trap is this?
It's like type
Type
3.
3.
It's like,
Type-
it's like combination. I don't know.
Exactly.
Type 2 thing.
Exactly.
Yeah.
Type 2 or type 3 doesn't matter. It's in that zone between the SNR and the last buyer. We say that's fine. Either one is fine. Okay. But the more important piece is drawing that trap area. So we draw that trap area. Okay. Now, what we have right now as a trap is simply a confirmation that this move up has begun its refresh. The refresh has come in. A breather has come in for that move up. Okay. That also means that a seller has come in. It's no longer a buyer. It's a seller at the moment. Okay. Now, what the big boy will do is it wants to take the price. It's in the big boy's best interest to take the price from here all the way up to the trap area to do what?
Invite the
Let
sellers.
the sellers come in. Place
To
their
lure
orders.
more buy.
Yes.
Release
to
the trap. Yeah.
release the trap. In other words, it invites more big sellers to sell confidently from that trap area, put in big positions. Okay, now prices begin to come back in. Now, if I was to ask you a logical question, right? If you are in an uptrend and you're looking to buy this eventually, and now the big boy has taken the price back to the trap area, so the sellers can try. do you want to see sellers to be strong as a reaction or weak as a reaction from that trap area?
Weak.
Weak, right? So whenever you see the sellers are weak, you say, bingo, that's very good. This is a sign that the buyer is eating up all the position the sellers are putting in. Okay, so let's play this a bit. Price begins to go back into the trap area now. That's where the seller is going to build orders. That's the reaction. First reaction, let's give it a bit more time. A bit more time. So far, is that showing you a strong seller or is it questionable seller?
Definitely questionable.
Questionable, right? This is your release point. Why is it coming back to challenge that release point again? Okay, and if we do this, you say, this is excellent. This whole piece is excellent. There is a launch coming. There is a launch coming. The seller, the buyer, has put in its primary buy to take the price up to the trap area. Now it's putting in its secondary buy, and there should be a launch coming in very soon. Yeah? Okay, so that's the whole logic behind that trap. Now what we're doing is we're putting that trap that you know of within the right context. And we are saying that previously we're talking about the release. In our case, when we are with the big boy, we don't want to sell that release. We simply want to see how the sellers react from that release area, so we can jump in as a buyer. Yeah.
Yep.
So far, so good, everyone.
Yes.
Yeah. Okay. Okay. So, Nicholas, you have any question? Your hand is raised. You're good?
Yeah, sorry, that was the question I asked way earlier.
Sure.
I was probably still raised. Thank you.
No worries. Okay, so that's the whole idea, that we are looking to go with the trend, because any sells we do, by the way, just so you know, this is that primary, secondary is here. That release point we also call a divider. We call it as a divider. You can keep that in mind or not, doesn't matter. But if you ever hear us say divider on the elite or amongst ourselves, that's the divider. Yeah. So any trade you do on the divider or on the release is a counter trend. And when you are in an uptrend, you don't want to do that counter trend sell, because there's a chance that the buyer is very desperate and price may not even do this and come to that, may not even do that much. Right. Now, when do you sell this as a counter trend? I'll cover that next week. When is it safe to sell it? I'll cover that next week.
So just a question, your primary ends as soon as you get a touch on the release.
Yes.
Okay.
Now, let me talk about this now itself. So when you have your refresh or trap, that breakdown, that seller can keep on doing this, correct? It can keep on going lower as much as it wants. And then it will find a level before it comes back to do its release. Yeah, that's generally the case. And then we're saying, okay, well, this is that level because it was able to push it all the way back to where the release or trap is. Now, whenever you see prices come down and begin to react from an area, let's say price is over here right now. I'll cover this a lot more next week, but let's say price is over here right now. Then you're saying, are the buyers really going to take it as a primary from here, from this area and go higher? Or is it going to go a bit lower and then catch another level below and then go higher? What's it going to do? That's for next week. However, as soon as price begins to do this, you say, I don't know if this is the primary yet, because what if it still goes lower? But as soon as it begins to come back to the trap area and touches, this primary is confirmed. In other words, the buyer wanted to use that area to bring in its primary, bring in its first buy. Okay. All right, let's do this. Let's take a quick 5 minutes break. We come back and we go deeper. This is now, oh yeah, before we take a 5 minutes break. Now, what we've done right now is we've said you have a downtrend and a refresh is coming in to sell again. Keep one thing in mind, that even if you have an up move and you have a pullback coming in, before you even focus on that buy, don't forget you have sellers coming in at the moment as a pullback, as a seller coming in, right? So if you get any stop of this move down, again, stop of this move down, so a refresh comes in, this is a refresh or an opportunity to sell for these sellers. These sellers will attempt to sell first. Don't become a buyer straight away. Let these sellers, because they're getting a discount, they're getting buyers for these sellers to try again. Let them try and sell. If then they begin to fail at some sort of a level and they cannot keep on going lower, that's where we say, okay, that's now the buyer's turn to take it higher. So do you begin to see that the whole stopping of a move comes in every scenario? Yeah, are you all with me so far?
Yes, yes.
Yeah.
Yep.
Okay. Let's take a 5 minute break, come back, and we'll go deeper. Okay. Now, I'll reiterate or re-emphasize on the same point again, which is the most important piece is knowing how to read the bigger story. That's the most important bit. And we're going to start learning how to read the bigger story from whatever I'm going to show you today. And then we'll continue on doing that next week on the chart as well. Okay? Now, if you have, let's say, a move going up, and then you have your last buyer gets taken out, you have a trap, or in other words, you have a refresh of that move up, correct?
Yes.
Yeah. Okay. So that becomes your trap area, and you have your primary buy from the big boy taking the price up to that trap area. So the sellers can attempt, and then you begin to see the sellers, like we saw in the example earlier on, begin to see sellers are not performing, which gives you an idea that seems like the buyer is very desperate and the secondary could be coming in to launch anytime. Now, just by gauging from that primary, secondary, from the trap, gauging how the seller is performing, what does it tell you about the trend? Is it a strong, healthy trend, or is it a weak trend?
Strong.
Strong. Strong.
Strong, right? So in other words, if you have a refresh, or in other words, a discount for an up move that comes shallow and begins to launch, don't say, oh, it's a very shallow discount. I want a deeper discount. A shallow discount is a good thing. It shows the trend is strong. It shows also that when you begin to buy, it's got a higher chance to go and launch. Yeah. Now think of it as, for example, I always use these examples just so you get the idea. Think of it as, let's say, an iPhone 14, for example, where let's say you've got iPhone 13 that you bought for 1K last year. And then this year, iPhone 14 has come out, and the salesperson is telling you you need to pay 1.5K to buy iPhone 14. Now, because the product is so strong and is in high demand, then even if a tiny discount comes in, everyone takes it, right? That just shows that the product is extremely healthy. So a tiny discount doesn't mean it's a bad thing. It's a good thing. Yeah, a shallow discount means it's a good thing for the product. Now, what if the same move, you come on your 60 minutes, you have the same move, however, then that's what you see on your 60 minutes. So you have a big move up and a deep pullback of that move up. What are you thinking right now? What could this be? Is it still a good buy? Not good buy, but is it a good purchase, good buy? Or what are you thinking now?
Higher time
I'm
frame has come
thinking
in.
this could turn into a range.
Very good. Very good. You both are spot on. So this could be some sort of a range or a channel on a higher time frame. That's why you have prices coming in deep. A deep discount isn't always good. You have to investigate what this is. Yeah, because that deep move coming down is straight away invalidating the trend. It's saying you don't have a trend. Yeah. Okay, let's talk about this a bit more. So whenever you have a deep move, we have to investigate on the higher time frame to see what this piece is. And I'll show you what this means. Now, again, let's take an example so we can understand it properly. Let's say you have a BMW. No disrespect to BMW owners. I like BMWs. Yeah. You got a BMW that you bought last year for, let's say, 40K. Okay. And you've had it for a year. And this year, in 2022, you happen to be at the showroom and the salesperson says to you, we have a brand new BMW for 60K. So then you ask him, you say, okay, tell me the functionalities, tell me what's changed. And apart from, let's say, a more aggressive looking bumper and new headlights, there's not much difference in the car, the one that you have and the new one. So you begin to question, why are they charging 60K for a BMW that hasn't changed, right? So the salesperson knows that, and he says to you, okay, I'll give you a 50% discount on the car. You should buy it. You say, no, I'm not convinced. I don't feel it's worth my money. Then he says, I'll give you 70% discount. You say, no, I'm not convinced. 90% discount. Now you're thinking, okay, the product is not worth it. It's not a strong, healthy product, but the discount is too good to miss. Right? You're only paying 10% of that 60K, which is very little. It's too good to miss such a price. So just like how you're thinking or how we are thinking, the whole world says, amazing discount, let's just buy it and not hold for long. We'll just sell it as soon as it comes back to the same 60K that we were originally offered, because they think prices cannot go up for this car. Right? So they begin, as soon as price begins to come high, they begin to dump the car or sell it, and it crashes down again. And they offer you the same big discount, it goes back up again, and so on and so forth. That's a story of a channel. When the product is not strong enough at the time, right? But the price is too good. So far, so good, everyone?
Yes.
Okay.
Yeah. Okay. Now, what a channel really is, a channel is simply a sign of a slowdown. Now, why do I say that? A sign of a slowdown. It simply means that it's come to a level above. There's a level above, right, that has slowed down the price at the moment. That's why it's channeling. There's someone pushing it or stopping it from going anywhere. Now, all that is good. However, a channel isn't always a sign of a reversal. Okay, so let's say, for example, that you investigate this channel and you see you have a down move and you've got some sort of a pullback coming in, and that pullback begins to channel at a good level. Yes, that channel is part of that pullback downtrend to sell. That will reverse and go down at that level. Yeah. However, if you have a channel at a level, and then when you open it up on the higher time frame, you see it's an uptrend channel, then that uptrend channel is a temporary slowdown to eventually launch and break through that level. Yeah. Now it could either maintain that channel and then launch, or sometimes it could also, the older the channel, it could also break through the channel first, giving that move up a refresh, and then it will launch. Yeah. So,
Yes.
so whatever the channel is, we need to investigate. So in other words, if you have prices going up, 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 and then you see it coming down deep, always say, what am I dealing with at the moment? Is this a big range or channel? I've got to investigate and understand, is it coming from a downtrend or an uptrend on the higher time frame? Yeah. Now, let's have a quick look at an example. So far, everyone's good? You all follow?
Yes.
Yep.
Okay. So from left to right, first of all, let me know, what do you see? Do you see an uptrend, downtrend, or sideways?
Channel up.
Channel.
Yeah.
Okay.
Uptrend.
Okay. I gather you see it as an uptrend, but
With the
you don't
channel.
but you don't like the way it's going up, correct?
Yes.
Yes.
Yeah.
Mhm.
Okay. That's good. That's good. So you say, so when you come to your chart on the 60, you say, I see an up move, but it's not a healthy up move. It's not a healthy uptrend. Why? Because every time it goes up, it comes in very deep. Every time it goes up, it comes in very deep. That's not a strong uptrend. If I begin to buy without looking at the higher time frame, my buys can fail at any time. Yeah. So if you compare this up move with what you saw earlier on that pound CAD, is there a big difference?
Yep.
Yeah.
Yeah. So
This is trending.
this is trending, exactly. Yeah. So let's go back to Aussie USD. And we say, okay, what do we have over here? We've got an up move, and then it comes deep. But look at the distance between that up move and down move. Begins to go back up again, higher than the previous high, doesn't launch, begins to hold, and then crashes down. Yeah. So, and then you say, well, crashes down, coming in deep. Look at the distance between the move up and move down. Look at the distance between the move up and move down. We are dealing with
Higher time.
some sort of a channel on a higher time frame, some sort of a channel, but on a higher time frame because of these big gaps. These big gaps are telling you you're not dealing with a setup that belongs to 60. You can see it on the 60. but doesn't belong to the 60. Belongs to a much higher time frame. Yeah. So at this stage, do you have a trend?
No.
Do you have a strong trend? No, right? Because you have
No.
some sort of an up moving channel. So when we go to the higher time frame to understand what this channel is, to remove these gaps, we are simply going to the higher time frame to look for where is that trend? Is it an uptrend or a downtrend where this channel belongs to? That's what we're looking for, an uptrend or downtrend. You see, if I go back to that pound CAD, your trend is visible. It makes it easier, right? However, when you go to your Aussie USD right now, you say, I don't have a trend, I have a channel, and I need to go back, I need to go higher time frames because this belongs to a higher time frame. I need to go to the higher time frame to look for where that trend is. And if this channel is part of a downtrend and then you have a channel, then this is nothing else but a pullback for a downtrend at a level to sell again. Yeah?
Yes.
Do you all get that?
Yep.
Yeah. However, if it's an up move channel, then it's a temporary slowdown at a level to eventually launch up again. Okay. Now, without going through the whole sequence of how to go to the higher time frame, I'll cover all that next week. But let's put a very quick box over here so we can go to a higher time frame and see what this piece is. Okay, so we'll put a line as well at the top. And I'm simply going to the daily because of this big gap. I'm assuming it's higher than the 4 hours, but it's something I will talk about next week properly. I don't want to talk about the higher time frames yet with you all. I don't want to confuse you all yet. So if I go to the daily, what do you have here, first of all?
A downtrend.
A downtrend, right? And you begin to see that this channel that was coming in, it's part of a pullback at some sort of a level right now to go down because of that downtrend. Yeah, so don't worry about what this piece is, because eventually what we want to look for is some sort of a downtrend that gives you your
Primary, second.
Your refresh, primary, secondary. That's what we're looking for. So we don't have that yet, but don't worry about it. I'll talk about that next week. Yeah, it simply means that it doesn't belong to this time frame, belongs to a higher time frame. We'll cover that. Don't worry about it. But that's eventually what you're looking for. But that's only a setup. You're getting your downtrend visible right now, and that's a pullback. So that's what you're doing when you're reading your 60 minutes and you're saying, what could this be on the higher time frame? Ah, look, the trend up on the 60 is not a proper trend up. Could this be a pullback on a higher time frame? Right? So even one can begin to trade the channel before it even begins to break down. So let's say even you have your move down on a bigger time frame. I'll show you how to trade the whole channel. So and you have a pullback at a level, and then it channels. We don't know when this channel will break. We do, but then while it begins to break, we can also trade it as a channel where we sell from the top and we come out over here at the bottom of the channel, and then comes back up again. We sell again, so we can be more sell biased. If we sell biased, that's with the flow. If we buy from these areas, that's counter trend.
Counter trend.
Yeah, but whatever the case is, we've got our big picture bias that it's a down move, pull back to sell. That's the whole idea.
Good question.
Yeah.
So like right now where price is, right? Previously, if you want to count that, that'd be a trap I'm sorry, if the scroll back just a touch. Just making sure I understand this correctly. And then also, I'm assuming since this is also sell biased, type 1 trap breaks would have more strength, right? Is that correct? If it just blows through the trap without creating some sort of range, would that be more strength essentially, like this one kind of is to the sell side?
You mean this one right now?
No, sorry, it's on the actual chart itself.
Let me go to it. Yeah.
Right. So recently, the last, let me just annotate real quick.
Yeah.
This area, right? This has been broken, right? So we have a trap, right? And you would just kind of count this as a type 1, right? So, our entire trap area, if you want to count it in terms of the actual support and resistance, probably be here, right? So price is coming back to that now, right? So I'm assuming you'd be sell biased, correct?
Yeah. So it's good that you're thinking about it, but I will help you out with this next week. However, just to keep you at ease as well.
Right.
Right now, what you're dealing with is some sort of a channel, right? Which is, say, part of a bigger
picture,
bigger picture, pull back at a level, right? So and then any sells you do over here is simply saying that you are trading the channel only the channel at this stage. You're saying, okay, well, I can see all this. Prices have begun to come back and it's breaking through. All right, I have a sell opportunity to take it lower, but then lower back to that bottom of the channel. You're not saying that this is going to be as the sell to take it all the way down and go perform as part of that big pullback sell. You're not saying that. So as long as you know that you're looking at the details now, details of that channel, of that big channel, that's fine. That's fine. However, what we will talk about in the coming days is if this is still, if what we saw on the daily is a down move and a pullback, but the pullback is coming in with a channel, how do we further refine this? How do we further refine this to make it a move down? To sell this, right? Still a bit early to get into that, but as long as you follow through at this stage.
Yep, sure do.
Yeah. So you can do all that as long as you know the bias is for the sell. So it will give you an edge to say, okay, there's going to be more power on the sell side, even as part of that channel. but to answer your question, whether this is a lopsided or not, this is your last buyer, begins to come back and hold at, let's say, the last buyer or at the SNR. So it's some sort of a type 2 or type 3.
Okay, that counts as a hold. All right, got it.
Yeah.
I was thinking, okay.
Yeah.
And then type 1s would be like considered higher strength, right? In terms of like the chance of price moving away aggressively, or am I just, or is that even...
Generally, yes. Generally, yes.
But you get those at the top alley or the bottoms, right? But you're looking at the 60 minutes or whatever. You're not going to get that.
Yes.
Usually,
yes.
yeah. And the other thing is that I think here, this bar right here tells you that the sellers, they have no power because they try to take it down. Like you said, it's a fake here. And the buyers came back and again, they took it up. So that's your clue right there.
Yeah. However, the thing is, you're spot on. However, the thing is that because it's part of a bigger
Picture.
time frame, when you switch to a higher time frame, these will be all compressed. So you may not see the details much, but yes, if you were to see the details like you are right now, that's spot on. Okay, so for today, all I wanted to show you is what does it mean when your move up is not trending, it's coming in deep. That means you don't have a trending market at this stage. Yeah. So for that, we have to investigate. We have to, and it belongs to a higher time frame. So we have to investigate this. Okay. Any questions before I show you something else?
Ali, I have a question regarding the refresh.
Yes.
Which provoke that refresh? Which does that refresh to happen? The buyers in an uptrend or sellers coming in an uptrend?
Which refresh is that, Jon? This one over here?
No, generally, in an uptrend,
Yeah.
we have the refresh.
Yeah.
And that refresh happens. Who controls that refresh? Here, for example, we have buyers.
Yeah.
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 We have buyers, and here the buyers stop. And I don't know who does this move down, because the sellers come only here.
Yeah. It's generally a level above that creates that strong reaction. So it is still sellers. It is still say the big boy sellers, but the big boy, the market, the whole market who are looking to sell this, they will only see it when it comes back to the trap area. But yes, these are also sellers that push it down. They're
Yes,
also
but
sellers.
until here there are buyers. So the buyers
buying,
push up.
Buying is saturated, so you need sellers to come in order to get it going again.
Yes, but who controls all this? Because the buyers come again here when the sellers appear.
Yeah, it's
the buyers.
So this piece here, it's done in a way where, let's say, for example, the buyer begins to buy a lot from here, and prices begin to go higher to an area where you see the buyer then doesn't put in any more positions, right?
Okay.
So it's the buyers are they become very weak at the top, right? So then any reaction from a level where there are sellers, let's say, trapped in there, or they like the area, then they can easily take it down and it goes down strong. So in other words, the buyers lift off the fuel around these areas. Does that
Okay.
make sense? Yeah.
Yes, yes. And they come later after the sellers.
Yes.
Let's
Yes.
say from here.
Yes. They come later. They let go of the fuel, and then sellers begin to take over. Then they say, okay, well, this is where I want the sellers to try a lot more, and they try. But this is that phase where they say, we've given the sellers all the chance, all the opportunity to sell. If even then they fail to take it lower, then they take over again.
But they sometimes succeed, not to go lower, and it changes to a downtrend.
Yeah,
In this case, or a higher time frame refresh.
Exactly. So if that happens, we'll talk about it next week. But if that happens, it simply means that this whole refresh that's coming in was never meant to be for this time frame. That's why it goes a bit deeper. But I'll talk about that.
Yeah, but this fight is between buyers and sellers, and buyers come here when they feel they have chances or something like this.
Yes.
Or,
yes.
Okay.
Yes. Like in this case, this seller comes in, and then the primary takes the price back to the trap area for the sellers to put in everything they have, and look, it just comes down, goes right back in, and then holds. That's a very clear sign the sell is very weak. The buyer is taking over all the positions to launch.
Yes, but this is the primary, this is the secondary. Yeah.
Yeah, this is the primary, and this is the secondary. Yes.
During this seller, the seller comes strong, but during this time, does the buyers build up in order this leg to be weak?
Yeah.
Yeah.
Yeah. Yeah.
So this is also a fight, which
yes.
release, which proceeds up.
Yeah. So this is from here. This is that drop that needs to do this. It needs to act that way. It needs to be that way.
Mm-hmm.
Right? So as soon as you see, look, it's dropping. Why is it holding? Why is that going right back in? Why is there more buying pressure? Look, it's coming that deep. Or look, it's coming even more deep. Right? That on its own, this phase on its own is telling you there's something wrong. The sellers are not strong. And then it shows you a lot more later on.
Okay.
But I'll cover this. I'll cover this a lot more properly next week.
Okay. Thank you very much for.
You're welcome. You're welcome.
Yeah. Thank you.
Okay. Now, let's do this. Let's have a look at another example where I'm not going to open up a lot of stuff, but I'm going to show you bits and pieces to make you understand why chart reading is so important on any time frame you're looking at that stage. And I'll explain what I mean in a minute. So let's say the whole switching of the time frames I am going to reserve for next week, so I don't confuse you at this point, but I want to show you an example at this stage. So let's just quickly do this. Okay, so if you were to come to this chart on the 60 on New Zealand USD, who can tell me from left to right, what do you see? Do you see an uptrend? downtrend, sideways? What sort of uptrend do you have, and so on? What do you see?
It's an uptrend with
Rather gender
with the
uptrend.
channel.
Uptrend with a channel, right? Yeah. So why? Because you have a move up, and when you have the first move up, it comes in slightly deep, then it begins to go higher, begins to hold, comes in very deep again, begins to go higher, comes in very deep again, begins to go higher. We'll see what this does, right? So every time it goes up, it doesn't launch, but instead it comes in deep as well. So we're saying, yes, we have an uptrend, but it's not the best looking uptrend, right? So other thing is, you say, look, there is plenty of gaps between every swing up and swing down. So you say this belongs to a much higher time frame than the 60. Although I can see it on the 60, but it belongs to a much higher time frame than the 60. Yeah? Okay. So,
Ali, can I make a comment?
yeah.
Did you just sell a position in British pound USD?
I'm looking at it. I haven't.
So am I, dude. That's the exact. Tom, thanks so much.
There's
That's
a demo
exactly
trade
what
on
I was
it.
just talking about before.
I
Tom.
knew, Matt. You're a big guy, buddy. I knew that all the
I'm
But
sorry.
I-
That's the exact trap I was just talking about. I was just like, that's the trap from. Anyway. I'm sorry.
Okay. So you've got, and then you say, all right, well, if that's the case, I don't have an uptrend. I don't have a solid uptrend where I say, okay, any pullback, any refresh, I will buy. I need to investigate what this is, find where the trend is before I get involved. Because I might be, let's say, buying, and this is a pullback coming in for the sell, and this begins to crash down, even if it maintains that channel, or it can even break down and create that move down that it needs to do. One thing to keep in mind, the older the channel, the more chances it has to now begin to move, right? If it's new, then you can trade that channel trading. But when it gets old, then you worry, what if it breaks now? I have to be careful. Or if you're with the right direction, then you say, what if it goes and breaks down now? I'm happier. Okay. So whatever the case is, we say we have this, we need to investigate this. All right. So let's do that. Let's put a line above, because we say if we have a channel, we say it's a sign of a slowdown. A channel is a sign of a slowdown, and it's slowing down because there's someone above it, a level above it. Okay. Now, what I'll do is I will quickly move, because I know what this piece is. I just want to show you that when you're reading a chart, you need to look at the details of the chart and not just, oh, it's an uptrend. There's a lot more to it, and it gives you a lot more information. Yeah. Okay. Everyone's good so far? It's everything that we did on the previous example as well. So it's nothing new. Okay. Now, let's quickly go to the monthly, because it belongs to the monthly, and I'll explain that in few days. But let's just take this as an example for now, and we'll delve into it properly next week. Let's say you have this move down, and for that move down, you have your last seller that comes down, goes right back up, begins to hold a little, creates what?
Refresh.
Creates a refresh. Yeah. Now let's draw this trap area. Okay. And who can tell me what happens next? When you have a refresh, what other markings do you do?
P, okay, S.
Primary and secondary.
Primary, secondary. So you've got your primary. The primary's job is to take the price down all the way to
To the
the
trap area.
trap area. Okay. And then buyers begin to buy. You're in a seller's market at the moment. So you're looking to sell, but you want to see how would price go up and how would it perform? Will it stop? So the secondary can come in and it will take it lower. Yeah. Okay. So let's do that. That price begins to go up. It happens to go to the same line that we drew on the 60 minutes. You all see that right now?
Yes.
Yeah, I'll explain what this piece is next week. Don't worry about it. But for now, it goes to the same line that we drew on the 60 minutes. Why is that? Because when you open up this piece on the 60 minutes where you came from, okay, that red line is the circle I drew. Yeah, so it's telling you that prices are coming up, and it's creating a channel towards the top. That channel is telling you it's a slowdown of whatever move is coming in. Then when you put it with the bigger picture on the monthly, you're saying that you have your refresh, you have your primary, and you have your attempt from the buyers to take it up. The buyer is not launching. The buyer instead is coming to an area where it's beginning to slow down on that 60 minutes that we saw. Yeah, so it's actually telling you that this slowdown is a sign that it's not going to go higher, it's going to collapse and come lower. It's a much higher time frame, so a range means something, and what you need to look for, I will talk about it next week, but for now, all I'm trying to tell you is that 60-minute channel we saw was giving us clues already that there's something happening on the higher time frame. Don't keep buying. It's not an uptrend.
In this case, you have to look for sales, only sales.
Only sells. Yes, your bias becomes sell. Yeah, and this is that secondary. This is that secondary that comes in. And then it begins to perform. It begins to go down as a secondary sell. So this is your primary, this is your secondary. Then this secondary moves the market down for the next few months of downtrend. Even if you don't catch that at the top, you know that you have a downtrend coming in for the next few months. So you're more sell biased for the next few months. I'll cover that properly next week. I'm just more focused on the channel that you saw on the 60. It's giving you information. Don't let go. Don't say, oh, it's an uptrend, I need to buy. No, you got to investigate this a bit more.
It seems like Ali it's better to a beginner to trade higher time frames.
What you need to do is, you see, although the story is coming from the monthly right now, and I'll tell you why it's coming from the monthly in the coming days. However, you're never trading the monthly. You're not doing this. You're not saying, okay, I will sell and I put my stops above here. You're not doing that.
Yes.
I mean,
Years.
imagine it will take this lowest point is March 2020, and this is now 2 years from that time. So we're not doing that. However, just to answer your question, what we're saying is that we still want to go with the bigger boy. We still want to use the bigger boy, yet still trade the smaller time frames, but with the bigger boy bias, with the bigger boy story. Yeah, so I'll give you one example. Let's say the primary has brought the price back down to the trap area. Right? And you know that this area, the buyers will try to buy first before the secondary comes in. Then you will stop all your sells at this trap. You won't be selling it. In fact, you might be even buying it short term, and I'll explain how to do that in the coming days. Whenever it's a lot higher time frame, right, then it gives you more room to attempt, even if it's counter trend. But I'll explain it how to do it safely. But this setup right now begins to help you to say, okay, it's come here. There's going to be an attempt to buy first. Let me be more biased as a counter trend for the bigger story, then sell until the sells begin to kick in. When sells begin to kick in, you say, I'm only going to get any refresh I get on the smaller time frame, primary, secondary, I will sell. So you begin to look for these on the smaller time frames while it's doing its secondary on the monthly story. We'll cover it properly next week. Yeah. So to answer your question, Abdul Qadir, yes, not only for beginners, for any trader, it's very important to go with the bigger boy. Can someone go mute? There's a background noise, please. Thank you. Yes, Ryan.
So how do you know when the primary is finished? Because you might see this as a touch and then think that's the secondary.
Yeah. So I'm glad you're asking that question, but it never touches. If I zoom into it, it's very, very tiny, but if I zoom into it, it never touches.
Yeah,
it's just hard to see when it's zoomed
but
in.
then I guess this one touches, but it's sort of just a leg before continuing. So I guess, are you looking for something to tell you that the primary's done, as in, getting a trap on a lower time frame or seeing it turn around on a lower time frame? Is that what you're doing?
Yeah. So when it's coming in, you're simply saying, okay, well, keep on going down, and then on the smaller time frame, you know how we saw it together on I think it was yesterday, maybe we said you have your move coming down and you have your last seller giving you a trap, and then that trap on the 60, when the price begins to come down to the trap area, you go to your 5 minutes 2 time frames down in this case, go to 5 minutes to see when your 5 minutes trap last seller gets trapped. So whenever it touches the trap and then it begins to trap back, we say, okay, it's come into it, it's already trapping the last sellers, it's looking to turn around from that trap area. Similar thing happens with the higher time frame. You just need to go to the right time frame down to see it.
So in this case, you'd go in the daily and you'd see it turn around somewhere there.
Yeah, most it would be 2 time frames down. However, we'll cover that properly.
Yep, thanks.
Here, I want to show another view, if you agree.
Sure.
For this refresh, we have here the primary.
Okay.
Okay, here it could be a trap now. And here, the secondary. And from here, the launch for on phase. I could see here the touch of this with this.
Yeah, no, it
So
doesn't
this seller
touch.
is trapped.
It doesn't touch. So if I do this,
Ah.
you see, this is that highest point, correct? Let me draw it even more properly. So this is that highest point over here,
Yes.
and this is that box. So when prices come down, it never touches. It never
Okay.
touches it. Yeah.
Okay.
And this is still going up as part of the piece. Yeah, as part of the piece above. So primary is not confirmed yet, because when this comes here and it doesn't touch the trap yet, this can easily do this and then launch still.
Yes.
And we say it's not primary yet until it touches. So it touches here for the first time.
Understood. Okay. Thank you.
No worries. Yeah. So in summary, what we are saying is that when you have your refresh coming in shallow, that's good. That's telling you have a trend happening right now. But when your refreshes come in deep, then you say, what am I dealing with? Is this some sort of a channel or a range on a higher time frame? Look at the gaps in between, So we begin to investigate it first. We are investigating with the purpose of going to the higher time frame to look for that trend. Please keep that in mind. We're saying, let's reduce these gaps. Let's go to the higher time frame because it belongs to a higher time frame, but to see where that trend is on the higher time frame. Yeah. Okay, all good. So what we will do next week is this. When you come and pick your pair for next week, and you're going to do it for every single day, starting from Monday. When you pick your pair for Monday, then what we will do is we will say, okay, this is your pair. You've picked it for so-and-so reason. You'll talk about it. And then we will take it from A to Z, which will include going to the higher time frame to understand the bigger story, the bigger bias, right? To say, okay, well, are we with the bigger bias or are we going against the bigger bias? Right? So if we are going with the big bias, let's say the bigger story says sell it, then at least we know that we can hold onto ourselves. If we are selling, we can, we can be a bit more relaxed. If we are if it's a much higher time frame and the story says sell, but we are buying on a smaller time frame because we think the sell is not ready, then we know we are going counter trend. And if we're going counter trend, then our money management and risk management needs to be robust. Right? So it will keep us on our toes to say, okay, you're going counter trend, make sure you're quick in and out. Make sure you only buy up to that level because sales could be coming from that level and so on. So we can be better prepared when we go in counter trend. Yeah. Now, one thing I would also suggest, and it's of course your call, is that when you're picking your pair for next week, if you have the time, do a pre-analysis video. Maybe let's say 2 to 3 minutes max. Don't make it long. So if you have it long, then generally people just give up. But if you have it short, then it becomes nice and easy. Do a pre-analysis video, and this is only for yourself. You don't have to do it for your pairs for next week, but it's only for yourself. There are sections on the community under Unicorn, under your section. You have live sessions, you have practice, and then you have post analysis. You can begin to post those videos on there. The reason why I highly recommend it is because even at the prop firm, we do that before every trade we take. And what happens is that when you're talking in a video, you're talking loud because you have a mic and you're talking about, and you can hear yourself, right? You're talking about the reasons why you're picking that pair. You're picking it because you have a downtrend, because as part of the downtrend, you're getting some sort of a refresh to sell again. That refresh is giving you a secondary opportunity, and so on and so forth. So you're talking about the reasons why you are looking at that pair. Now, keep one thing in mind, that it's only the reasons that you're picking a pair is what you can tweak. Let's say you've picked, you list your reasons, and then your pair performs or doesn't perform. Then when you do your post analysis, you say, for so and so reasons, I picked this pair. That reason worked. I can hold on to that reason. It's a good reason. The second reason, no, I was thinking wrong. I've got to tweak it and change it. So you can begin to you'll have tangible pieces to change. Does that make sense? And that's very important. Second thing is that again, you do your post analysis once you've done your trade. So you talk about the reasons why it failed or why it worked, so it sticks with you for your next trades. So that's something we generally underestimate, but I'll tell you that it's extremely important, and it has helped all of us in the prop firm a lot. I can't explain how much, but it's really useful, right? So something that you could do for you don't need to do it for next week, but for your own good, you could begin to use that section. And then what you could also do is, let's say if someone posts their post analysis, then someone else can jump and say, oh yes, that's interesting. I also see it that way, or I see it that way. You all can begin a discussion amongst yourselves. That's also healthy to have. Okay, so next week, what we would do is we'll start same time as we have been doing this week. However, we might go a bit further. So instead of 2 hours, we might go 2 hours and 20 minutes, 2 hours and 30 minutes, because this is this week where not only I will be talking, you will be talking, and then I will help out on the chart, and there'll be someone else who would give in their views. So we need a bit more time when it's a discussion going on, and then we can go deeper into setups. So we may need a bit more time than 2 hours. Yeah, I think that's all I had. Is there any questions you may have?
I have one fast technical one, hopefully. Just in regards to 3 different types of traps, right? We have the trap where this is just a technical question, in terms of the logic itself. The trap where type 1, where price just blows right through it and there's no hold, right? Which seems to be the strongest. Then we have type 2 and 3 where there's some sort of range at the support and resistance to the guy who started it, right? And then the release is going to happen from that trap area, right? So then, like type 1, it seems like we're drawing, we would draw a box like at the support and resistance and above that all these traders are trapped. But in theory, like I probably should use on the chart, that's higher or lower than like the act than type 2 or 3. But like it seems like type 1 is the strongest. Am I hopefully understand what I'm saying? But like price is going to actually have to go further back to get to that release area. Does that make sense?
Yes, it does. It does make sense. However,
So
Yeah,
go ahead.
yeah.
Why is it the case if that one's the strongest? Like it seems like price would not come back. You know what I mean? Anyway.
yeah. So you see, and then you notice this as well, where, well, let's say for example you have your last buyer and you have a trap, a lopsided trap.
Right.
If you have such a trap, then when we draw our trap area, generally what happens is if market is it needs to go, like it literally does that and it needs to go. So you see it come back to the bottom or the underside of that trap and just keep on going. That's very common. However, if it's got a bit more time, then generally if from day one it just dropped, then you'll see it come in a bit deeper because there's nothing to hold it. It comes a bit deeper. However, if you have something like this, maybe something like this, and then it does a lopsided, right? Then if it's got enough time to come in deeper, then you'll see it generally come back to some sort of a level within that trap. It's not the best.
I got it.
Yeah.
I got it. It makes more sense now.
Yeah.
Right. There was no, like, someone didn't get their orders off. So like there's no reason for it to hold lower.
Yes.
Right. Okay, got it. The logic now makes more sense. The logic wasn't making sense to me before.
Yeah.
And I was like, that one's the strongest. Why would it even come back deeper?
Mm.
But it's no one got their orders off, so it has to come. All right, I got it. Thanks, man. Appreciate it.
No worries.
Thank you, Ali.
No worries. No worries. All right, you all take it easy. Have a good weekend. Oh, Jon, did you have a question?
Yes.
Yes.
Will we do a scan of the market together and choose the best pair for a session?
Yes. So you don't have to get into the whole correlation at this stage. You can keep it very, very simple where let's say you're going through your charts and you see, okay, I have a nice trend down or I have a nice trend up. Let me see if I can get a refresh, primary, secondary, and I can time that secondary with, let's say, New York Open. So if you keep it that simple, and then we will open it up a bit more to say, okay, you've seen a trend, but what does this trend mean in that bigger picture? So I'll help you with that.
Okay, this trend be on 60 minutes.
On 60, yes. 60 minutes and then 5 minutes entry.
Okay, thank you.
Yeah, and please, everyone on demo accounts, no live accounts.
Ali, one question.
Yes.
Of course.
Yes.
Should we have to pick up the trade before, on Sunday, or should we do it on Monday? Or we have to record it, the whole
No. You with the recording is for your own good. You don't have to do it for the sessions. But let's say, for example, for this coming Monday session, what you could, because you know, for example, if you look at your charts on the weekend, you will see a trend. The trend is there. You'd also most likely see a refresh has already happened. But then you say, okay, well, is my secondary getting ready? Will it get ready for New York Open on Monday? Or let's say, for example, you trade London, then that's also fine. You could simply say in the session when you come in, you said, I saw a downtrend, I saw a refresh, I saw a secondary sell, but it was getting ready for London, and I've done it. Right? It could also be, for example, you have a downtrend, a refresh, and you're looking to sell it for London or New York, right? In a demo. But once it began to play out on the 5 minutes, you say, I didn't like the way volume came in. I didn't like the way this happened. So I didn't take the trade for that reason. And that's fine as well. As long as you're experiencing what it's doing at the live market. Yeah.
Yes, thank you.
Okay. All right. I'll see you all on Monday. Have a good weekend.
Have a good weekend. Thank you.
Thank you.
Thank you,
Sorry
Ali.
about the noise
Thank you.
just now.
No worries. No problems. No worries.
Thank you for the post analysis, Ian.